All right, gang. So you just have to realize price will stop you out. If you try again for great trade one and trade one for a buy, you got it for great trade one at take profit 3 and rolled it all the way up to take profit 5, 1842, depending on your lot size from 1825 to 1841. Could have easily been 5 grand, 2 grand, 10 grand, depending on your lot size. But from here, from trade one for a buy at 1838, it's just too confusing to get at the top of the uptrend. This is where you lose the most money at the higher low. And then you could have gotten that great trade one at the bottom. This is where you make the most money and rolled it all the way up to take profit by 1841. You know, depending on your lot size, could have been 10 grand, 20 grand. As you try to get in for trade one at 1838 and you're in profit all the way into 1841, depending on your lot size, could have been a couple hundred. But you know, you got in at the top of an uptrend, and all trends are temporary. And you see price what head all the way back down, shoots past trade one at 1838 and goes all the way down to 1832, and then eventually goes past great trade one and heads at 1825 and heads all the way down to 1820, and had got you out this trade. So you have to be extremely smart. You have to be patient with Forex, and you have to think, as you know, the broker market to see who they can stop out at trade one, you know, for a buy. You know, who's getting in at, you know, at the top of an uptrend when you lose the most money. You know, as the brokers, as the banks will stop you out. You know, as you see, banks manipulated the market and got you out at 1831 from 1838 to 1831, and we'll do that, you know, and get everybody out this trade at great trade one. Got everybody out this trade. Price goes to 1820 from 1825 to 1820. Gets everybody out this trade. So your brokers and the banks will do this just to make money off of you, as you got in at the middle of an uptrend and it stopped you out and took your money. This is where you lose the most money at. This is where you get. This is where you gain the most money at. So you have to just put everything together, you know. We're gonna even go over the news and the market news. As I can show you more, you know, how gold was, how this move happened today. If we go into today, February 11th, you know, I can show you this move February 11th. You know, what happened Friday as the market closed. It's Friday, so you have to be extremely patient, and you want to enter at the bottom. Once again, you want to enter in the bottom. Once price makes a higher low, price will make a higher high. You know, and you once you got in at this higher low, once price makes this higher low from take profit 5, take profit 3, and you can got in at 1825 and roll it all the way up to 1841. Take profit 5 area. All right, this is where you make the most money at the bottom. You know, I'm gonna show you this example again. And this is where you lose the most money at the top. You know, so extremely important for your psychology. I hope these videos help, gang. Pay attention to what lot sizes you're getting in, and we'll talk more about that too in a second. You know, if you could have gotten for $1, $2, and you're risking 90% of your account, and then price shoot, and you know you lose 90% of your account, 85% of your account. You know, and that was all you had, when you could have just waited and you could have got back in the overall direction. You know, so it's extremely important. You know, or wait for the price to make a higher low, and you could have gotten for a buy. Is where you make the most money at, and rolled it all the way up to 1842. All right, so let's break this move down. All right, game. So let's just go back real fast. Once price, we have to be mindful of, you know, everything. We have to be mindful of everything. You know, first thing we would do is analyze the market. We want to you know, as you know, we don't know when price. We have to wait for price to make a higher low, and this took a whole day from February the 10th to February 11th. So looking for entries can be uncertain, as you know, we don't know which way the direction the market wants to go in. We know structure though. We know price wants to make a higher high, and then makes a higher low before what, making a higher high. You know, we know structure. You know, and price will consolidate, you know, for a couple of hours, you know, before, you know, and you see after price broke this trend line, consolidated before going all the way up to take profit 7. So, you know, a lot of factors come in. We have to determine if prices, you know, if is going down or price wants to head back up. You know, which direction is price going in? Is it going up or is it going down? We have to determine all of that. Looking on the daily, the 4 hour, you know, you have to put everything together. Gain as on the 15, I can show you more structure. We can actually dive in. I can show you exactly what happened on the 15. You know, and we go to the 4 hour and the daily too, and the 2 hour and the 1 hour for the overall direction. What we will see too, you know, these are psychological levels though. Take profit 5, take profit 4, take profit 3. You know, in price, once price goes to take profit 3 and gets above take profit 3, it'll go to take profit 4. Once price gets above take profit 4, it'll go to take profit 5. Same thing back here. When price gets to take profit 5, it goes and closes below take profit 5, it'll close below take profit 4, take profit 3. Once price closes below take profit 3, it goes down to take profit 2. This is take profit 2 area. This is take profit 3 area. This is take profit 4 area. This is take profit 5. So this is take profit 2 area. Price did get to take profit 2 area. You know, it didn't go all the way down to 18, 19, 18, 20 at take profit 2 area, but this is still take profit 2 area. Price got to take profit 2 area. Once price goes to take profit 3, it'll go to take profit 2. So, you know, extremely important to understand, as these are our key areas, our key levels, our take profit levels that price likes to go to. It'll go from take profit to take profit to take profit. That's how we trade, from take profit level to take profit level to take profit level to take profit level, and that's how we trade. So just putting everything together, trend line. Look, we have to determine the direction, the momentum. This all for your psychology. You know, as price can move very fast, and the banks can manipulate the market very fast. So once we identify the trend, the overall direction, you know, we can get in for entries. And, you know, if we're on a 15-minute time frame, this is where we find entries at on a 15-minute time frame. And, you know, I don't blame you, you know, if you're on a 15-minute time frame looking for entries. As you know, this is where we look for entries on a 15-minute time frame. And, you know, we trade on the overall trend, we look on a 4 hour and the daily and the 1 hour to trade the overall trend, you know, for the direction. You know, we look on the overall trend for a clear direction of what price wants to do, but we will scroll down to the 15 minutes to see more structure. And you have to be aware of this, what time frame you're using. You know, this is for your psychology. And I said we're going to break this video down, but, you know, I have to say this real fast. If you're on a 15-minute time frame, a 5-minute time frame, and you enter a trade on a 15-minute and a 5-minute time frame, and price shoots past back down on a 15 and a 5-minute time frame on a faster time frame, because you're looking for entries on a faster time frame. So you have to be clear of that. You have to be aware of that. You know, as you know, looking on a 15-minute time frame, price is fluctuating faster and moving faster on a 15-minute time frame. So you have to be aware of what time frame you're using for entries. As you know, on if you're looking for entries on a 15-minute time frame, just understand price is going to be moving faster on a 15-minute time frame, because you're looking for entries and trading on a 15-minute time frame. So, you know, you have to be mindful of that, of what time frames you're using. As I like to use the 15-minute time frame for entries, but I like to trade on the 1 hour and the 4 hour time frame. As you know, it shows me the overall direction, and the 1 hour and 4 hour, it does move slower than the 15-minute time frame, but, you know, it lets me know the overall direction. It's clear for me to trade on the 1 hour and the 1 hour and 4 hour compared to the 15. As you know, some people trade on a 15-minute time frame, some people trade on a 1 hour time frame. If you trade on a 15-minute time frame, you have to be aware that trend reversals can happen faster. As you're looking on a faster time frame, you're trading on a faster time frame on a 15-minute time frame. I just had to say that. I had to get that out the way. Again, as price, you know, moves slower, and you know, as you're trading on a slower time frame on a 1 hour or 4 hour time frame, price is moving slower. But when you're trading on a 15-minute and a 5-minute time frame, price is moving faster. As you can see, all these candlesticks all represent 15-minute candlesticks. Extremely important for your psychology. I hope you understand that. As you're trading on a faster time frame, and price is moving on a faster time frame. So, you know, we just look for setup. We look for entries for on a 15-minute time frame, and and if we're trading on a 15-minute time frame, you have to understand that price, you know, will reverse faster, and, you know, will head up faster on a 15-minute time frame. So you have to get out faster, and exit faster on a 15 and a 5-minute time frame. So I hope you understand that. In the next video, we're going to break this move down for today. All right, gang.